What if I told you that everything you've been taught about getting rich is a lie? Wall Street wants you to believe that trading is a genetic gift, a talent reserved for mathematical geniuses with Ivy League degrees. But in 1983, a legendary multimillionaire made a bet that would shatter that illusion forever. He claimed he could take a group of complete strangers off the street, actors, security guards, and accountants, teach them a secret set of rules for just 2 weeks, and turn them into millionaire traders. Did it work? They ended up making over $175 million. Welcome back to the channel. Today, we are unpacking one of the most legendary, mind-blowing, and entirely true stories in financial history. It's a story about the ultimate zero-to-hero transformation. We're going back to the wild, ruthless days of the 1980s Chicago trading pits to uncover the true story of the turtle traders. This isn't just a finance story. It's a profound psychological experiment. It proves that wealth isn't about predicting the future, and it certainly isn't about having a high IQ. It's about something much harder to master: absolute robotic discipline. We're going to break down exactly who these ordinary people were, the secret 14-day system they were taught, and the emotional roller coaster they endured. Because the truth is, the rules of getting rich are incredibly simple, but surviving the psychological torture of executing them, that's a completely different game. Let's dive in. To understand the experiment, you need to meet the mad scientist behind it, Richard Dennis. In the early 1980s, Richard Dennis was known as the Prince of the Pit. He was a Wall Street anomaly. He didn't come from old money. He didn't go to Harvard. He started as a runner on the Chicago Mercantile Exchange, making minimum wage. But Richard had a system. He borrowed $400 from his family, and within a decade, he had turned that $400 into a staggering $200 million. He was a god among traders. But Richard had a fundamental disagreement with his business partner and best friend, William Eckhart. Eckhart was a mathematician, a guy who believed that trading was an innate talent. You either had the sixth sense for the markets, or you didn't. Richard Dennis completely disagreed. He believed that trading was a process. It was a set of mechanical rules. He argued that if you stripped away the emotion, you could teach anyone to trade just like you can teach someone to ride a bike. The argument grew so heated that Richard finally said, "I'm going to prove it." He had recently returned from a trip to Singapore, where he visited a turtle breeding farm. He watched how they grew thousands of turtles in giant vats, fast and efficiently. He looked at Eckhart and said, "We are going to grow traders just like they grow turtles in Singapore." And so the bet was on. Richard Dennis placed a massive, full-page advertisement in the Wall Street Journal, Barron's, and the New York Times. The ad was simple but unbelievable. Richard Dennis is accepting applications for individuals to learn his proprietary trading methods. No prior experience necessary. If accepted, you will be trained for 2 weeks and given a $1 million account to trade. Dennis keeps a percentage of the profits. You keep the rest. Imagine reading that over your morning coffee. It sounded like a total scam. But because Richard Dennis's name was on it, the world went crazy. Over 1,000 people applied. The screening process was brutal, focusing on logic, risk assessment, and psychological resilience rather than financial knowledge. In the end, Richard selected a group of 14 people. Who were these chosen few? If you walked into that room expecting to see guys in Armani suits with MBAs, you would have been shocked. There was an actor. There was a Dungeons & Dragons game designer. There was an accountant. There was a security guard. There was a young woman who had just graduated with a degree in linguistics. These were people who, just weeks prior, were struggling to pay rent, taking the subway, and living completely ordinary, high-stress, low-income lives. Now, they were sitting in a luxurious, wood-paneled room at the exclusive Union League Club in Chicago, staring at a billionaire who was about to hand them the keys to his empire. Richard Dennis walked into the room. He didn't give them a motivational speech. He didn't tell them to trust their gut. In fact, he told them the exact opposite. He gave them a manual, a set of rules. For 2 weeks, he drilled these rules into their heads. So, what was the secret system? It was a strategy called trend following, and it completely contradicted human nature. Most people in the stock market try to buy low and sell high. They try to predict the bottom. They try to catch a falling knife. Richard Dennis told the turtles, do not predict, react. The rules were shockingly simple. The breakout. If the price of an asset like gold, oil, or a currency breaks above its highest price of the last 20 days, you buy. You don't ask why. You don't read the news. You just buy. The exit. If the price drops below its lowest price of the last 10 days, you sell. You cut your loss immediately. No hoping, no praying. Position sizing. Never risk more than 1% or 2% of your total account on a single trade. If you have a losing streak, you cut your trade size down. You survived. That was basically it. The secret formula was so simple you could write it on a napkin. But Richard Dennis knew something the turtles were about to find out the hard way. Knowing the rules and executing the rules are two entirely different universes. After 2 weeks, the training was over. Richard Dennis handed these former security guards, gamers, and actors real money. Huge money. Millions of dollars of his own capital. This is where the experiment became a psychological torture chamber. You see, the turtle system had a glaring, agonizing flaw. Because it relied on catching massive trends, it meant that the system was wrong 60% to 70% of the time. Let me repeat that. The secret to making millions of dollars meant you had to lose money on 7 out of every 10 trades. Imagine you are a guy who used to make $15 an hour. You execute the system perfectly. You buy a breakout. The market reverses. You lose $50,000 in an hour. The system says, wait for the next signal. The next day, you get a signal. You lose another $40,000. Human nature screams at you to stop. Your brain tells you the system is broken. You feel stupid. You feel like a failure. This is where most amateur traders die. They override the system. They say, I'll just wait for this to bounce back before I sell. But Richard Dennis had drilled one absolute law into their minds. If you break the rules, you are fired. For months, the markets were chopping sideways. The turtles were bleeding money. William Eckhart, the skeptical partner, was probably sitting back thinking, I told you so. You can't teach this. The psychological pressure was unimaginable. These ordinary people were watching hundreds of thousands of dollars evaporate. But they held the line. They acted like robots. They took the small losses. Cut. They protected their capital. And then the market broke. In 1985, the currency markets and the commodity markets stopped chopping. They started trending. Huge, massive, historic trends. The rules triggered. The turtles bought. And the prices went up. And up, and up. Human nature tells you to take your profits early. When you see you are up $100,000, you want to cash out and buy a Ferrari. But the turtle rules said, do not exit until the system tells you to. So they held. The security guard held. The actor held. They watched their accounts swell from $1 million to $2 million, then $5 million. While the rest of Wall Street was panicking, trying to predict the top, the turtles were just surfing the biggest financial wave of the decade, completely emotionless. They just let the math do the work. At the end of the experiment, Richard Dennis called the group together. It was time to tally the results and cut the profit-sharing checks. The group of Misfits had generated an aggregate profit of over $175 million. Several of the individual turtles became multimillionaires in their own right. Richard Dennis had won the bet. He proved, beyond a shadow of a doubt, that ordinary people could achieve extraordinary wealth if they were given a proven system and possessed the unbreakable discipline to follow it. But the story doesn't end with a perfect Hollywood sunset. There is a dark, fascinating epilogue to the turtle experiment. Years later, Richard Dennis disbanded the turtles. He told them they could go trade on their own, and he even published the secret rules for the world to see. He essentially gave away his million-dollar formula for free. People asked him, "Aren't you worried that if everyone knows your strategy, it will stop working?" Richard Dennis smiled and said a quote that every trader should have tattooed on their arm: "I could publish my trading rules in the newspaper, and no one would follow them." The key is consistency and discipline. And he was right. Even among the original turtles, once they were out from under Dennis's strict supervision, some of them failed. Without the threat of being fired, human nature crept back in. They started second-guessing the system. They started letting their egos take over. They couldn't handle the drawdowns, so they tweaked the rules. And they lost. Only the ones who remained rigidly, painfully disciplined, like Curtis Faith and Jerry Parker, went on to start their own billion-dollar hedge funds and cement their legacies. So, what is the ultimate truth behind the turtle traders? Wall Street wants you to believe that investing is complicated, that you need a PhD in economics to understand a matrix. The turtle experiment proves that the mechanics of wealth are actually quite boring. Buy strength, sell weakness, manage your risk, and survive the bad days. The real battle is never against the market. The market is just a mirror. The real battle is against yourself. It's against your fear of looking stupid, your greed, your impatience, and your ego. The turtles weren't superheroes. They were ordinary people who were simply taught how to turn off their humanity for just a few hours a day. And that made them millions. If Richard Dennis handed you $1 million today and gave you a set of rules that required you to lose money for 3 months straight before hitting the jackpot, do you honestly think you would have the psychological strength to stick to the plan? Let me know the absolute truth in the comments below. If you found this story inspiring and you want to continue uncovering the brutal, brilliant truths of the financial world, make sure to hit that like button and subscribe to the channel. We bring you the greatest stories of money and human psychology every single week. Stay disciplined, trust the process, and I'll see you in the next video.